Hey everyone, it's Prime from Prime Alerts. Today we're going to go over another weekend watch list video. I posted on my Instagram for those of you who wanted me to go over specific stocks, so we're going to go over them. But what I also wanted to talk about first is earnings whispers. So as swing traders, for those of you that love swing trading stocks or options, one website that you would definitely want to check out is earningwhispers.com because they give you a bunch of stocks and the respected earnings date. So this coming week, as you can see, we have a lot of bank stocks that are coming up that have earnings. Now, what earnings means is it's a report that comes out typically at the end of the day. Sometimes for certain stocks, it comes before the day as well, before the trading day starts. But it's a report that shows you what the company's doing, if they're profitable, and this is what investors take a look at. And if a stock has really good earnings, then their stock typically blows up after hours on the day of their earnings. If the stock has terrible earnings or bad news comes out regarding that stock on the earnings date, then the stock will tumble. So what I like to do is I like to trade stocks that have earnings, but I like to trade them before the ER date. You never want to trade a stock, especially for options traders, you never want to hold an option all the way through the date of the ER. Okay, so as you can see on Bank of America on Wednesday, they have earnings, right? Bank of America, Citi, PNC, we got Chase Bank on Tuesday. So if the market opens on Monday, you don't have a lot of time to really let the trades ride out and see if these stocks are going to go up before their earning date. I would not recommend trading any earnings or stocks that have earnings on Tuesday, but for the ones that have earnings on Wednesday, Thursday, and Friday, you can definitely look to see if you can get in on some place, even if you only swing for one day. If you take an option contract, swing it overnight, if the stock blows up, you can still make a lot of profit. So let's take a look at Bank of America stock. So here we have BAC, that's the ticker for Bank of America. And when I like to swing trade, I always pull up my longer time frame. So what I did was I zoomed out, and I was able to see a trend line. So I drew my trend line, as you can see on the bottom right here, and it was respected, and it kind of bounced here from July 8th, right? So July 8th till July 9th, in just one day, look at the stock, went from 38 to 40, 40.25. And if you're an options trader, you know that you can make a lot of money on a stock like Bank of America if it goes up just even $2 off that move. So right now, on the 4-hour time frame, we have Bank of America over the VWAP line, and we also have it here over the 20 SMA. It's already past the 9 SMA here. Now it's over the 20. And the next major resistance it's got is my next pivot level here at 40.50 and the 50 SMA. Now the 50 SMA is going to be key level here. If Bank of America can get past my 50 SMA level at 40.63, then it's got room to go up all the way to the top trend line. You can already tell right now the pattern that's forming here in Bank of America. It's almost like in a triangle pattern, right? With respect to the trend line on the top right here, 3 times, actually more than that. We got 1 touch, 2, 3, 4, almost 5. So we know that this trend line here is very respected. So what I would look for in a play like this is look at some of my other indicators as well. So my RSI right here, it's not overbought, it's not oversold, it's right in the middle. So that tells me, okay, this trade is something I can still play. It's because it's coming back from being oversold, as you can see right here. Okay, my MACD crossover indicator, as you can see, the green line is starting to cross up, and it did start here to curve up on the upside to show that Bank of America is ready to go fire up. And on my bottom indicator right here, this is also looking like it wants to go up here. So based on all those indicators and my entries, what I would do is I would look for a bullish engulfing wick on Monday, leading up to the ER, because I feel like Bank of America could possibly run up near $41 at least, $41, $41.10 before the earnings date. Because remember, earnings is on Wednesday. So we could see a Bank of America tank and then blow up in one whole day, or we could see it just run up all the way to ER and then see what happens. So a good call entry for Bank of America that I would take, I would find a good key resistance level. As you can see, it gassed out here. The high of this wick was 40.24. So what I would look for is, let's go back. Let's take a look at historically. Okay, if you take a look at this wick right here, this one, same thing, 40.26. So I would take my entry above at least 30. Okay, so if I draw my horizontal line right here, I take it at 40.30, that'll be my entry. Now if we go back and we see this level, historically, stocks have respected this level. As you can see right here, clearly it's a strong level, 40.30. So we know that if Bank of America gets over 40.30, we definitely have room for it to go up near $41 all the way. So that's what I would look for a swing trade. And that's just one of the earnings swing trades. I'm not going to go over all of them, but that's just one of the earnings plays that you could play potentially for this week. Now let's take a look at some of the requested ones from Instagram that our followers asked of. So the first one is TMMC. So let's take a look at TSMC. I don't even know what this stock is. I don't even know if this is maybe he gave me the wrong ticker. Let's see, TSMC. It's a stock, but I can't pull it up for some reason on my end. So we're going to move on to the next one. Sorry, whoever requested TSMC. Let's move on to Snow. So Snow was requested last time on our last video, and this time it blew up. So take a look, guys. If you guys remember last week when I posted the video for the watch list, I said, watch this trend line, right? I said if Snow gets over a certain point, we could see it retest all the way to the trend line, and look what happened. Not only did it go all the way up to the trend line, okay, so Snow blew up like at least $20 plus. It broke the trend line and continued running up. Okay, remember what I told you guys last weekend. Once a strong trend line is broken, this could potentially go all the way back up near the 300 ranges, because as you guys know, it's already went up. The high was 431, so it's got plenty of room to come on up near these ranges right here. So let's take a look at Snow. Now what I would do is I would wait for a pullback. I wouldn't enter Snow right away because yes, it broke the trend line, okay, but look at the RSI indicator. The RSI indicator on the 4 hours telling us that this stock right now is extremely overbought. There's a lot of price action going on here. On my other indicator right here, it's also showing me that it's overbought. So I would definitely wait for a pullback, and a good pullback entry for Snow would be if it comes back down to at least 263.50. Why? Because it's a trend line. So if this trend line, as you guys know, is really respected already, now that it broke over the trend line, what was previously resistance now becomes our support. At least it should be. Because if this trend line stays intact, and we know that this is a strong level, if Snow pulls back to the trend line, it should bounce up and continue going on up. So that's the first level. Now we got the VWAP level right here, it's 264. But again, I would wait for that 263.50 level for it to bounce, at least around 263. And let's say it breaks below our trend line and comes back down. Well, the 9 SMA and the pivot level right here is where I would look for the next bounce for calls. So at 257 potentially, you could look for a bounce, or like I said here at 263. So that's what I would look for. I would not try to chase Snow since it's already broken out. Wait for a pullback and then continue letting it go on up. So that would be that's my analysis for Snow. Let's move on to the next one. So another requested one again was AMD. All right, so let's zoom out right here. So AMD again bounced off this trend line that I have drawn right here. And as you guys can see right around here on July 8th, it bounced perfectly off the trend line. Went from $87.20 all the way up to 91. So what I would look for AMD, if you guys remember from my last previous videos, I would look for AMD to get above 92.30. Okay, why? Because we have the 20 SMA level right here. We got another strong pivot level right here. And I don't want to take calls above a bullish engulfing wick. Like for example, if I took calls above 91.30 for AMD, as soon as it hits here at 92, we could see a strong rejection and for it to pull right back, right? Because it already went from 87 to 90, almost 91, 91.30. So I don't want to catch that rejection. I'd rather get in above this strong resistance level because then I have room to go all the way to 94.32 which is where my next resistance level is, and then the next pivot level is at 95. So it's all about risk to reward ratio. Would I rather risk taking a trade that's going to stop me out potentially as soon as it goes up, not even a whole dollar? Or would I take a trade entry where I know I have a lot more room for it to go on up and for me to be profitable? So that's what I would do. I would take calls above 92.30, above this pivot level, and 20 SMA. Okay, and if we take a look here, the MACD crossover is starting to curve on up on the upside. So by the time AMD does get over 92.30, the MACD crossover will also be ready. And I also got here my stochastic indicator that's getting ready to come from being oversold to now coming back on up as well. So that would be my entry for AMD. Let's take a look at another one. Let's take a look at DDOG. Okay. So if I zoom out on DDOG, if you guys remember, DDOG did pull up off this trend line. I got a lot of trend lines drawn on DDOG. But one thing I would take on DDOG for sure. So we know DDOG bounced off to 50 SMA, right? That's a dark blue line. And right now it's at my golden fib line and a pivot level resistance. So what I would do is I would let it go over it first for us to get it back in on calls. Because we already know it retested at 110 and it came all the way back down, respected to 50 SMA, and bounced. If we take a look at our indicators, stochastic is ready to fire up. The RSI is not too overbought. It's like coming back down here in the middle, so that's okay. That means we got room for the RSI to go back up on the overbought section as well. MACD crossover looking like it wants to curve on up. So I'll take calls over for DDOG over 108.60. Yeah, that's where I would take calls. Or actually over the bullish engulfing wick of this. So let's take calls at 108.90. Or you could take it at calls over 109. But either way, that has room to go on up if we can get past this resistance range. So that's DDOG. Let's take a look at FedEx. All right, so FedEx, similar thing, similar pattern as I believe it was Snow that we took a look at. Oh, not Snow. One of the other stocks, but it was Bank of America, right? So now let's take a look at FedEx. So we see a similar pattern here forming, right? So FedEx and Bank of America have similar things. We got a trend line going from top to bottom. Okay, we got a trend line going from bottom to all the way here. So the trend line starts right here. We got a 1 touch, 2, 3, 4, 5. So we know that this trend line is definitely one that's intact. Now let's see what's happening here. So FedEx hit the top of this trend line. It's respecting it because historically, every time it's hit the top of the trend line, look what's happened. It hit it here, sold off. Came close to hitting it here, sold off. Hit it here, sold off. Same thing happened here. Hit it, sold off. It broke and it pulled right back. Now, the key for FedEx here, and where I will take calls. See this green line? That's a 200 SMA. Okay, now the 200-day moving average is a very respected one. And typically when price action gets above the 200 SMA on the longer time frames, that means the stock wants to go on up. And we also got a pivot level right here at 300. So for FedEx, I will take calls above. I want this trend line to break, because once a trend line breaks, especially one that's going from horizontally like this, or not horizontally, but you know what I mean, like once you get a trend line that officially breaks, getting over this 200 SMA and pivot level would be a big factor for it to go on up all the way up to 310 and so forth. So I would take calls on FedEx above 301. That's where my call entry would be. So let me set my alert here actually. All right, so we got our FedEx call entry. Yep, look at that. MACD crossover coming on the upside. RSI still in the middle. So that means that we're good to fire up. But we'll have to see because this trend line is strong. So we could see FedEx just come all the way back down here to 289 and then try coming back up and then break. Or officially break this trend if the market starts to pull back a lot. And I'm going to go over the whole market outlook here in a second as well after we take a look at these stocks. So Yeah, so that's our FedEx entry. Let's go over another one. So another recommended one was PENN. Let's go over PENN. All right. So PENN National Gaming. Let's zoom out a little bit more here. Okay, so I've drawn this trend line here to show you guys again. You always have to draw trends where stocks are being respected the most. And we know going across this field right here, we got our one touch, two officially broke up, pulled back, three, that's pulled back here again, four touches. It broke the trend line, but here's another thing you guys got to keep in mind: when something breaks a trend line and it pulls back up into the trend line or back in the original direction where it should have gone by respecting the trend, that means that that trend is still intact. Just because a trend line breaks, like you see here, does not mean that it becomes invalid. Because look what happened. Yeah, it broke, but the price action immediately wanted to get right back into the above the trend line and stay in that range. So that just validates that this white line, this white trend line, is strong. And here right now on PENN, we were over the 9 SMA, over the 20. It hit my pivot level resistance here at 74.20 and pulled right back. So where I would take calls now, just like the other example, you don't want to take calls right here. Just because you have a bullish engulfing wick and above the resistance level, it's not enough. Because take a look right here at 75.20, we got the 50 SMA. And remember the risk to reward ratio thing? If I take calls right here above this level and it goes up here, it's not much. So maybe what, $1 move? So yeah, depending on what contract you get, if you day trade it or swing trade it, if you get a contract that's near the money, and you get one that's with high delta, yeah, you can make something here. But what I look for is high probability setups. I want it to go up even more than this. So what I would do is I would wait for PENN to go above the 50 SMA. So let's say around 75.40 or 75.50, and then let it go on up. Or you could even wait till it goes over here, this next pivot level of 76, and then take calls above 76.15, for example. So that's what I look for on PENN, because I know that PENN has a lot of room to go on up. Because as you guys can see here, it's been selling off hard since March. It was at 142 and it kept on coming down. Now that it hit this trend line, just like it did in the past. Look right here. It came on down, it hit this trend line, and look what happened. Made all-time highs. And that's what we could potentially see happening here. It's coming down, hit this trend line. So if we get in on a good swing trade, we have potential for it to go back into hundreds and plus range. So that's something you got to keep in mind. So that would be those are my entries for calls. Wait for it to go above the 50 SMA on the 4-hour chart, or take calls above 76.15. Now let's go over the market. So remember what I showed you guys last time on SPY. SPY is extended. Okay, it's very, very extended. And eventually it will tank. Everyone knows the market is extended right now, so when you're swing trading, you definitely want to be cautious with the positions that you're going in with, meaning how many contracts you're buying on these swing trades, and you also got to keep in mind of the market sentiment. So what I mean by that is taking a look at SPY and QQQ. So right now SPY, it went over. Let's take a look. So order the view up right now went over the 9 and 20 SMA. It bounced off the 50 SMA right here at 427. And remember what I showed you guys in the last video. It's got room to come on up all the way back to this trend line, near 443 or 444. So the market looks like it's definitely still in a bull run, but when SPY reaches these upper levels of 440s and between 440 and 445, you definitely want to be cautious, because we could see a huge rejection all the way on back down to the bottom of the trend line. Okay. All right. If you want to just take a look at the channels, SPY on the weekly chart, I think would be better to draw as well. So if we zoom in, let's take a look at SPY on the weekly chart. See, even on the longer time frame, so that was a 4-hour time frame. This is a weekly, so every candlestick represents 1 week. And you can see how respected the trend line is on the weekly chart. So we know when SPY gets over here, what's going to happen? It's bound to come back down. It's inevitable. And if I draw my bottom trend line channel, let's take the trend line tool. If we just draw something like this, extend it all the way through. Yep. All right. So we know, if we take a look at this bottom trend line we draw, we can see it's respected here, 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 respected through these two candles as well, respected right here. So that's a good range. So that's how you should draw your trend lines. It doesn't have to be perfect. You just need to get the best range and see where you get the most touches on your candlesticks. So again, let's take a look at SPY on the weekly time frame. It's right now sitting at 435. We got room for it to come next week. So starting on what's tomorrow? July 12th. So we're going to get a new wick right here. So that new wick has room to go up to where? 444.70. And then what's eventually going to happen? It's going to come back down, retest this trend line back at 418. And what we could see happen if it's a really strong pullback, or if the market decides to just have a huge correction in general, we could see this trend line break and even go back down to 390s, 380s, potentially. So when you're swing trading, you always want to look at how much room you have left on SPY and QQQ, how much room, if you can see a channel on them, and if you know the market extended, see the pattern. If I didn't look at SPY, and if I can't see that SPY could reject here at 442, 444, and if I just keep on swinging blindly, if I take calls on trades right around when SPY's here, I would be an idiot, okay? Because I would not realize what the market is truly about to do. When you look at stocks, you don't just look at the dirt chart itself. You always have to look at SPY, QQQ, look at the ETFs that they're a part of. The tech sector is mostly part of SPY. And a lot of the most volatile stocks right now are the tech sector stocks. So you got to keep that in mind. So that's SPY. Let's take a look at QQQ. Now, QQQ is NASDAQ. What do we see here in QQQ? Let's zoom out all the way. Let's take our trend line tool. Draw it across. All right. So you guys see how I went all the way back from my top trend line tool and see where do the candlesticks respect the most. So if I zoom in right here, look at this. It's respected along this trend line the entire time until it finally pulled back. And now we have the top channel. So let's take a look at QQQ. According to my trend line, QQQ should gas out around 370, 372. So when SPY reaches that 444 range, when QQQ reaches 371, 372 range, I should expect for the market to pull back. It's inevitable. Unless the market makers for some reason blow both SPY and QQQ and they keep pushing it up and past the trend line. Because remember, trend lines can be broken. But when you have a strong trend line, typically they stay intact for a while. And according to the data that we have here, historically, SPY and QQQ have really respected their trend lines, and this is the weekly time frame as well. So that makes it even stronger when you're looking at strong trends on strong time frames compared to like looking at like 1 hour or 2 hour chart. That doesn't compare to looking at a trend on a weekly chart. So again, watch out for those levels. SPY at 443, 444 for capping out at their resistance, and QQQ here at 370. 375. Okay, so I hope this video helped you guys. Make sure you guys start drawing your trend lines, and not just for your stocks but also the ETFs, to kind of get a perspective on what the market is doing and how the market is behaving. If you guys enjoyed this video, please make sure to like the video and subscribe to our YouTube channel. I'll be posting every weekend, and I'll try to post more videos throughout the week as well. And yeah, I hope you guys have a great trading week in the coming week. And if you guys have any questions, let me know. Take care.